Now, Fintech giant PhonePe today announced the launch of its stockbroking platform Share.Market. The app went live today with stocks, ETFs and will soon add F&O and other segments. CNBC-TV18's Ritu Singh caught up with Nigam, co-founder and CEO of PhonePe, and Ujjwal Jain, the CEO of Share.Market, to understand the company's aspirations in the intensely competitive stockbroking space. Take a look.
Well, the $12 billion fintech giant PhonePe has had a slew of launches and announcements this year across payments, financial services and even e-commerce. But it says this is its biggest launch yet. Today, PhonePe has announced its foray into stockbroking with its app Share.Market. Samir and Ujjwal, thank you very much for being here on CNBC-TV18. And Samir, I'll start with you. What are your aspirations with this product? You said it sort of completes your bouquet of financial services at PhonePe.
Super excited because we always said send, spend, manage and grow. The four journeys of relationship a consumer has with money. The send, spend and manage part of it we've already solved for on PhonePe. Consumer lending being one missing piece, but we'll get there soon. But when it came to actually growing your wealth, we felt that the experiences needed to actually have a winning product required us to have another app, and here we are with Share.Market. I'm extremely bullish that with Ujjwal and Sujit and team, we have the winning combination of entrepreneurial talent and IP that we can develop around and differentiate ourselves over the next few years.
Ujjwal, a lot is resting on your shoulders. So tell us, you're entering this market which is full of a lot of players in discount broking and traditional players. What are you doing differently? What are your plans for the app?
So we took a view that from a DNA standpoint, there are market opportunities out there in broking business which has not been solved for at scale, which is around like how do you bring value when people transact on stockbroking platforms.
But Samir, that said, let's say the top 5 players in the market between Zerodha, Upstoxgrow, etc., they've cornered not just a large market share, almost 60% or so of, say, NSE's active clients. What kind of inroads can you make into this to capture a larger market share? And I know you've just launched, but what's the target here? I mean, how much can you get?
If you go back even 5 years ago when Grow was launching, Zerodha was less than 20%. Everyone said the incumbents are going to dominate the market. Where's the market? Between Grow, Upstox and all the other folks in the last 4 or 5 years, they've quadrupled the size of the market, at least in terms of cash. If I look at even the trading community, it's 6x'd in the last 5 years. 9 lakh or to about
45 lakhs.
45 lakhs now, right? 5x. So clearly, the appetite both at the bottom end of the market where people are entering and buying their first stock, buying their first ETF or investing in their first SIP, that's growing exponentially. And the people who are actually becoming informed enough and comfortable enough with disposable income, wanting to actually play in the more sort of sophisticated products, that's also growing exponentially. So I think the penetration levels are still so low that I think there's room for a whole bunch more players to actually play right now. There'll be very large swaths of people that go up the value chain, and they will want even more sophisticated solutions that are not just backed by a fund manager telling them. They will want a machine telling them. They'll want quant models telling them. They'll want what a hedge fund is able to do to be available to them. So the democratize of the knowledge part of the broking market or the wealth market is still ahead of us. Access has got democratized. Knowledge is not.
The very model has the word discount in it, right? And we're talking about very low fee structures, which is what discount broking is based on. Will revenue growth be a challenge in this? Because there's intense competition. One, the rates haven't really moved in the last 5-6 years or so where we've seen this model emerge. So do you think from that point of view, this will be able to significantly contribute to PhonePe's entire revenue growth story?
Two-part answer. In this particular space, everything was 0 to begin with. And then Grow made it 20, and then everyone else has followed. So cash trading, I mean, it's $20 a pop. So that's more than I've ever made on payments. So that's attractive enough. 20 rupees.
That's a public good, right? That's
I know, right? No, but I think jokes aside, you're right. I mean, no, we didn't call it a public good, but UPI has become a public good. And as the largest player there, I think we have managed to prove to ourselves, if not the market, but at least to ourselves, you can play on really sort of snack size margins if the volumes are very, very large, right? God knows, I think we've proven it out for ourselves on payments. So I think as long as your contribution margin is 70, 75%, that's the kind of range you need to play in, your revenue can go a long distance. I think there's a lot of focus on the revenue being high, but then the cost of revenue also needs to be low for that margin to open up. I think with platform plays inherently, whether you charge $10 or $20, as long as the margin is high, then it's a question of you have to multiply by number of transactions. And I think, again, we fancy this sector as one way we can make a lot of money because there's a few tens of crores of people that we think will join this market in the next 10 to 15 years.
Okay,
The advantage we can take a 10 to 15 year view. I think that's the big difference.
All right, so you're hoping this in the long term will be a volume game, and these new to market investors is what you'll really target. But before we close, PhonePe, I remember earlier when you launched your e-commerce app, you said anything that can be done on the phone we'll do. And you talked about consumer lending being the next area of focus. Will that close the bouquet, or is there something else that is also on your radar?
No, I think, geez, if you can close with consumer lending this year, I'll definitely personally just call it a big win and just stop there, because that'll complete the dozen. Yeah, it's been that busy.
And how soon will we see that happen, consumer lending? And what's your plan on that front? Again, a very intensely competitive market.
I think we've already said that we will enter with personal loans, so that's a given. We will also be entering with UPI credit, whatever flavor that takes. We've also entered with Rupee on UPI. We're already seeing very good traction there. So I think the sort of UPI Rupee story will open up. The PL story on distribution will open up. Some flavor of BNPL is going to come in. Okay. How that looks...
will it be through an acquisition? You've tried that earlier with Zest Money?
I don't think for... So actually Zest Money, we didn't do the acquisition, but we bought the consumer side IP. And good number of the team members are with us now at PhonePe. And so that's the team that's actually looking at the consumer launch right now. So will BNPL come in? Yes. Will there be some flavor of FLDG now that it's legal? Maybe.
5%.
Yeah, I think maybe. But I think what we are certain of is we will not be doing it on balance sheet. We will be working with NBFCs and banks. So it'll come soon enough. I think we are very clear. We flirted with NBFC, we flirted with AMC. We're doing distribution. That's what we're going to do.
Sameer and Ujjwal, a pleasure speaking to both of you, and all the very best with your new launch. Thank you.
Thank you. Thank you so much.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.